Hello and welcome to Pro Trader Strategies. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman. I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. And also remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Actually, let's talk about yesterday. Yesterday was a crazy day for me, actually. My house literally seemed like it was falling apart. I had toilet problems and the air conditioning went out, and it's only 110 degrees here, so I had a few things I had to get taken care of. Sorry about that. But talking about yesterday, we had CPI, which is Consumer Price Index, coming in slightly lower than expected at 0.1%, showing there's no inflation, Fed. We've been talking about this for quite some time. And then core CPI also in line with expectations, slightly lower than expected. So no inflation still yet again, even with the more volatile aspects of that number being ripped out of there. We got crude oil inventories yesterday that were above expectations by about 3 million barrels. It came in at a build of 2.2 million barrels. So overall, 3 million barrels over what was expected. And then today we started talking about a couple of things across the pond. Not really a whole lot to see there, but we did get German CPI, which came in line with expectations. And then we also got our unemployment claims coming in at 220,000, expected to be 22,000, expected to be 215,000. So slightly higher than expected there. And then a natural gas storage build of 102 billion cubic feet, which was expected to be 110 billion cubic feet, slightly lower there then, meaning that people aren't using that. They're starting to see a build, just like we saw there in crude oil. Now, crude oil, yesterday we got the sell-off based on that build and lack of demand. Today we got the rally back because of a lot of things going on over in Europe, or sorry, not in Europe, in the Middle East, where some tankers were starting to get blown up or taken over or whatever. So that caused this market to rally back, almost engulfing yesterday's, actually it did engulf yesterday's candle at one point. Today, we're starting to see that market start to come off just a little bit right here, as you can see. Yes, we came up, tested that point of control, rallied up to the point of control, and now we're starting to see a little bit of weakness. I've talked about this for time and time again. I think that we are going to stay within this area right here, basically slightly higher than that, 58 to basically 50. So I think mid to lower 50s, really, I'm looking at like 50, somewhere below $55 is kind of where I'm looking for crude oil to kind of hang out for the foreseeable future. At least now that we've gotten that economic data points on crude oil inventories, the only thing that's really going to send this market higher is disruption, and that's what the market was reeling about this morning and causing that market to, causing crude oil to really rally. All right, gold futures moving higher again today. I was really thinking we were going to break down below this 1322 area, which lines up with the Fibonacci. I thought we would break below here. That's the support right here. I thought we were going to break below that. This doji right there, we got confirmation for a move to the upside. Does not look like gold is out of the limelight yet. Has not lost its luster, if you want to go there. But we've gotten this nice little bounce, rally back, so I don't think that gold is coming back to where I thought it was, breaking below that 1300 area. That has to do with disruption and tariffs and China really starting to spin up the rhetoric over there. State-controlled media really starting to blast the United States about the tariffs. So it looks like this tariff war, which I originally thought was just a bluff, that is really gone bad, and it's going to continue to get worse, it looks like. So that really could start affecting our economy. I thought we were going to be out of it a little bit sooner. All right, now look at the Dow Jones Industrial Average. We got a pretty messy chart pattern here. I didn't get to really talk about this yesterday, but as you can see, usually when we talk about this, we get a chart pattern where you get something like that. The next day we get a confirmation, which is kind of like what we've seen right there in a sense. This is an engulfing pattern. One thing to note with this, when we if we look at just the day session, that's what a lot of the charts are looking like. We opened up above and engulfed that pattern, so you could look at it as a spinning top doji with confirmation, or just an engulfing pattern of that top. That really makes it look pretty bearish. Now we've gotten a bit of a bottom, and the 50-day moving average lining up right here. This is the 50-day simple moving average. That's acting as support right now, and it's acted as support the last couple of days. As you can see, we came down, tested it yesterday, what's today? Thursday, so we tested that on Tuesday, tested it again yesterday, and almost even tested it again today, coming very close anyway. I don't know if this is like a little bit of a bounce before we continue down, but it, to me, looks like it's pretty bearish. And we can take a look at some of the other markets where it looks as bearish. You know, right here we've got the NASDAQ coming down. I think I might even have this without the let's show it without the extended hours, and you can see we got that engulfing pattern there as well. Created that top, tried to create somewhat of an engulfing pattern. This one looks a little bit better, even though we don't usually like to look at the overnight session to determine our chart patterns all the time, but it's a good look right now because the charts have been so messy lately, and you guys have heard me talking about this time and time again. Really hard to read the tea leaves these days. You can see again an engulfing pattern. You know, some people call that like a shooting star or something like that on what was that, on Tuesday? Monday. And if we take off when we take that off, so we get this pattern here, top where we kind of gapped out just a little bit, and then a big huge bar like that, and that basically engulfed the entire pattern from before. That's again an extremely bearish pattern. Today we're starting to get that little bit of a bounce, but I think that this is going to be short-lived. I think that we're going to see this markets the way that it's setting up here. They're fighting back and forth, but I think the market is looking like it's going to kind of do one of these and then roll over again. So I am trying to play that with the market coming back to the points of control that I've talked about, where it's going to kind of settle down, that magnet aspect. All right, today's pattern just kind of sideways. Yes, overnight inventory did get short, but they flushed themselves out. Today we're just really trying to fight back and forth to see what's going on. I haven't added anything. The only thing that I did was on this LULU trade for earnings. I actually thought it was coming out yesterday after the close. It came out today after the close. So my last market commentary, I was talking about LULU. I was mistaken on the day for the earnings. So yesterday I was able to get a trade off in Lululemon for this, and I did a strangle in there with Lululemon, and I went into the June and I sold the 150 puts and then the 197.5 calls in there to create that strangle for the earnings, because we got the real high implied volatility. We talk about this. We want a pretty high IV percent, which we got. You can see this, it's up in the upper band. Then we're looking for that crush to happen that we got there. Anytime you get that earnings event right here, soon as that's out, we get the crush coming down. So we kind of know heading into this that we have the highest implied volatility we're going to at least see for the next couple of days. That's the opportunity to put in there. So with that strangle, I sold it for $2.63. I was able to buy it back for 15 cents this morning. So that was the LULU trade that we did on that, and I went into the June that expire tomorrow and did the 150 puts and the 197.5 calls to create that strangle. That's what creates that strangle. Sorry, I'm going outside the lines there. So that's what creates that strangle for 263 that I did, and I'm out at 15 cents. So that was a nice little winner for earnings. Love that volatility crush. Stayed inside the market maker move. You know, yesterday it traded all the way down to 155.22 right off the open. It looked like right after they released their earnings, it didn't look too good, and then they came out with forward guidance. Everybody started seeing that they actually beat on their numbers, so we got that big rally up to the top, making new all-time highs. But, you know, like I said, my strike location was very good with those 197.5s. It literally put me at my break even of 200 to the upside. So nice big premium for that. Made my break even very nice. I figured psychological level at 200 would be something very difficult to get through. We just didn't even go there. It just went up to, you know, about a quarter of that, and it was within the market maker move for the most part. And that's about it. That's all I've done. But this is a great environment to be setting up the butterflies. I'm going to be talking about how to do a long call butterfly in and around this environment. You've heard me talking time and time again. There's a lot of underlyings that have moved to the point of controls. Those point of controls are a magnet. So once the market moves down in and around those areas, that's the perfect time to set up a long call butterfly, because we've gotten that high volatility. We expect volatility to come out, the market to not move very much because it's stuck at that point of control. Well, I'm going to show you how to set up a strategy in and around all of those assumptions today's webinar, so check that out. Also follow us on Facebook. You know, you're getting these daily market commentaries on Facebook. Follow us so that you can get them right away, because we're able to turn these around a little bit quicker, so they're a little bit more evergreen for you. All right, so that's about, maybe not evergreen necessarily, it's not going to be evergreen, but at least fresh. All right, anyway, if you can't take that, take it easy.